Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and I just had to take my son to school this morning. Normally I don't have take to school duties, but today I didn't, so I got a late start today. I am sorry for that. I wanted to start this out by, yesterday we covered that Morgan Stanley was going to buy E-Trade, and I showed you where E-Trade had announced previously that they were going to open up crypto trading to their I think it was 5 million retail customers. And so it's not a coincidence. We've said from the inception of this channel that not some, but all of Wall Street is going to come into this. So I tweet into this new asset class. So I tweeted this yesterday. Today, Morgan Stanley announced it's buying E-Trade. The big boys are coming. All eyes on Bank of America, Merrill Lynch, which is owned by Bank of America, Goldman Sachs, and Fidelity. They are all coming to new digital asset class. What this reminds me of, and I'll tell you guys a funny story from back, I think it was after the financial crisis, when all of these, the Fed was literally getting with all of these different companies to buy other companies to save them from bankruptcy and all. If you remember, at the time, Bank of America is the one that saved Merrill Lynch during the financial crisis. Bank of America worked it out where they would buy Merrill Lynch because Merrill Lynch was headed to go under. At the time, and I shouldn't have said this, but I did. But at the time, I had a financial advisor, and he was a Merrill Lynch financial advisor. And Bank of America, my understanding was that Bank of America had received bailout money, just like all these others had. And so I asked my Merrill Lynch financial advisor once Bank of America bought Merrill Lynch. I asked my financial advisor if that meant that he is now a government financial advisor. For some reason, that jumped in my head. He didn't appreciate the question, but I was just joking with him at the time. Everybody was scared at the time, so you had to have some humor. But anyway, this is what I was saying, is that they're not some, but all of them are coming to digital assets. And I think everybody has zero doubt on that, because this thing took off 127 retweets. You can be assured that Bank of America, Merrill Lynch, Goldman Sachs, and Fidelity do know that we know what's coming. Now, remember, Fidelity did open Fidelity Digital Assets, which has been just for the purposes of institutional. That's how they, remember, many of you may not remember, but I do. All of these companies, all these major financial institutions, the ones that have gotten in so far, all of them started by telling you that this was going to be a new institutional asset class. In fact, I think Fidelity's website says that. But I told you at the time, yeah, they're going to call it an institutional asset class for now until they figure out how all of their financial advisors at the retail level can get paid on this, and they can buy all the companies necessary, like what Morgan Stanley did with E-Trade. Then once they all understand how they're going to get paid, then all of a sudden this new digital asset class is not just going to be for institutional investors who have already parked their money, by the way, but then it's going to be opened to the average Joe. And that's how this game works, folks. All right. Now, let's look at this. This is big time from Crypto D. At the Crypto D sent me this. This is an R3 tweet, okay? Remember yesterday we told you about this, the Swedish central bank was going to issue the e-krona as their central bank digital currency. Well, then R3 tweeted this out. We're excited that Corda blockchain was selected for Riksbank's e-krona solution with Accenture. Read the report for more on this exciting initiative and to learn why Corda's unique design features made it the ideal platform of choice. And then there was this from R3 as well yesterday. NADA, I guess that's how you say that, sent me this. They tweeted this out. The world's central banks are now setting out the roadmap for this journey towards digital currencies. Read more from R3's Chief Product Officer and founder, Todd McDonald. Now remember, I've told you several times on this channel, when the history books are written, you're going to hear 3 or 4 company names, and they will be some of the most important names within these history books with regard to blockchain and a global financial reset. One of them is R3. One of them is Ripple. One of them is Polychain. Another is going to be DTCC, and I could probably name one or two more. Remember those names because I said it. All right. But I went and looked at this article, and here's the article. This is an article about how the central bank digital currencies are coming. Look at this part in the article. Central banks, this is from the R3 co-founder. Central banks tend to move purposefully, but not quickly and for good reason, says Todd McDonald, co-founder of R3, the enterprise blockchain software company that began as a bank consortium and has since built the Corda platform. But lots of work has already quietly been done to build a foundation for central bank digital currencies. We have worked with Bank of Canada, Monetary Authority of Singapore, the Hong Kong Monetary Authority, Bank of Thailand, and we are also working on other projects subject to non-disclosure agreements, which will be announced. Now remember, you need to remember a few things. R3 is at least partially owned by SBI Holdings. Ripple is partially owned by SBI Holdings. They had a lawsuit a while back. Yoshitaka Katal, the CEO of SBI Holdings, got them together and basically was able to help put that lawsuit to bed. And now Ripple and R3 began working together again. Then R3 comes out with Corda Settler, which settles with XRP. XRP is the first digital asset on the platform. Ripple is all anywhere you look under R3 or Ripple. R3 and Ripple are right there together. Every one of these banks, just do a little exercise. Go to Google. I challenge you. Go to Google, type in Bank of Canada and Ripple, or just type in Bank of Canada, Ripple, Monetary Authority of Singapore, Ripple. Ripple is under every financial rock that you look. I think DM Logic said that a long time ago. Under every financial rock you look, you will find Ripple, R3, one or both. And a lot of times you'll find XRP as well. Now, this part right here I wanted to say again. We are also working on other projects subject to non-disclosure agreements, which will be announced soon. Well, what does that remind us of? I'll show you. Here's the CTO of R3. I've played this several times.
You still working with Ripple at all as a company? I know that there was some extracurricular activity that was working its way through the courts, but and it's since been resolved. But I'm curious if there's ongoing discussions, since one of their primary focus is on the interbank settlement component that you're also touching.
So frankly, Ripple is probably the only topic I can't talk about. So
Fair.
I just don't talk about it. I can't talk about it. I can't talk about it.
And
so you just can't talk about Ripple. They've got non-disclosure agreements. Things have been working in secret with central banks. Sounds good to me. XRP Crypto Wolf. XRP is offered to shareholders as SBI Holdings implements XRP year-end benefits. Any SBI holder with over 1 unit of shares will be eligible to receive 50 XRP. SBI VC Trade will aid people with cryptocurrency accounts and transfer the sum of 50 XRP. This is how I'm assuming they're getting all these shareholders to open SBI virtual currency accounts. Also, before I leave this, I always have to mention, remember, the prices we see on CoinMarketCap and all of these different coin sites do not reflect anything that's going on at SBI VC Trade, just for your information. Keep that feather in your cap. Next, let me give you the disclaimer. I'm not a trader. I'm not a chart guy, but every once in a while I'll show you a guy who does do that type of thing. The Joker at Kia Crypto is one of my favorites. Here's what he says. Cryptocurrency is a historical pivot in development. It gives trust, independence, and freedom in financial systems that have been lost for decades. Joker estimates Bitcoin will be trading around 18,000 in the summer 2020, XRP around $5.40. And here's his chart. This is the one guy with me that sent me things and told me things ahead of time. This is the one guy that has been right on at least 2 or 3 occasions when he's told me things, just as an FYI. Now, Green Eggs and Ham at Ham Eggs and Sam. This guy is really smart. He sent this up. This is a good one. So much for Bitcoin's store of value narrative. Seems lately XRP is more closely correlating than any other major crypto. And this is from a Cointelegraph article. This is the correlation with gold. Here you have XRP. Here you have Bitcoin. So you can see XRP seems to be correlating with gold better. I'll say what I've said before again. Here you have Bitcoin. All they've done with Bitcoin is they've created a marketing program and put marketing money behind it to say, hey, this is a new store of value. And the reason they've done that is because they know that Bitcoin's not fast enough, it's too expensive, and it's a polluter. and they can't market it as payments because it's too slow. And so a lot of these guys who got in early and they've already got their money in, the Mike Novogratz of the world, those guys got together and they said, look, we've got to market this as a store of value because, look, we know now this is a dinosaur technology. They know it, folks. They know it. Now, I'm not telling you this because I don't think it will be a store of value. I think they're going to be successful in their marketing campaign, which is why I own some Bitcoin. Okay? And I'm fine with that. Be a store of value. But the truth is, if you can store, ultimately what you're saying is you're saying, okay, there will only be 21 million Bitcoin. There's not going to be any more. And then all these people are going to pile in. And so it can be a store of value. Well, guess what? There's only going to be 100 billion XRP. And so it's got that same store of value feature. You know what the difference is? When you're ready to move your Bitcoin, it's going to take you 30 minutes to an hour if you're lucky. And when I move my XRP out of its store of value, it's going to take me 3 seconds. And guess what? My XRP is going to probably cost under pennies. Even if it's $50 million, it's going to cost under pennies to transfer it. The Bitcoin is going to be a little bit more than that. And meanwhile, in China, moving along. All right. Cryptopolis tweeted this out. The market moves together. XRP Utility is going to change that picture, and he's 1,000% right. For now, you see Bitcoin, when someone tries to manipulate Bitcoin, it affects the rest of the market. But guess what? That's not going to be that way forever. At some point, XRP's utility is going to leave all these things in the dust, and it's going to be fun because I'll be here to watch. All right. CS May 144K sent me this. Now, this is cool, folks. Check this out. iTrustCapital, who I've talked about, iTrustCapital reports XRP top volume asset so far in 2020. January trading activity for XRP was higher than all other assets, according to iTrustCapital, a trading platform for cryptocurrencies and physical gold and retirement accounts. It says XRP, the third largest cryptocurrency by market cap, has a unique position in the marketplace like Ethereum, but unlike Bitcoin, XRP is the critical component in a decentralized network to enable transactions. Unlike Ethereum, Ripple and XRP focus on working with existing stakeholders, including banks and non-bank money transmitters, to solve problems transferring wealth across borders. Now listen to this part, folks. This is where it gets exciting. This is their in-house economist. He says, trade in fiat currency, so-called foreign exchange or Forex, exceeds $5 trillion per day. It seems some of our clients may be trading XRP digital currency in anticipation XRP will be grafted into the infrastructure of these Forex markets. As a trading platform, iTrustCapital has to be totally agnostic in which digital currencies its investors' clients trade. However, there are never coincidences in trading activity. I don't think it's a coincidence that we are seeing more clients invest in XRP after seeing the massive increase in Ripple's on-demand liquidity transaction volume. And by the way, I opened an iTrustCapital account. That's where I have my Roth IRA that's invested in XRP. And for those of you that don't know, it grows there tax-free. I will never pay taxes because it's money that goes into a Roth IRA has already been taxed when you earned it. And then it goes into, you can open a Roth, anybody can open a Roth IRA. And then you open the Roth IRA and then it grows tax-free. And when it comes out after age whatever, 50 or whatever the age is, you don't have to pay taxes on it, folks. It's the best thing in the world. So I opened one of those, and I actually worked something out with these guys where you can go in the description of my videos and you can get the first month fee free. And there's nowhere that you can invest in digital assets that's cheaper than these other places. They charge you like 10%. So imagine if you're investing like $100,000. These other places will charge you something like $10,000 right out of the gate. Not with these guys. They charge you like $29.95 a month. It's a great deal. But I'm glad to see that they are really coming on strong with their XRP volumes. That's really good news. Michelle Vandenberg sent me this. Bridges are greater than walls. David Schwartz tweeted this out. This was from, remember yesterday we were talking about those, Spring had tweeted out that they were going to this Ethereum conference. Well, here's what they did at the conference. So Spring sponsored 3 challenges during the Sustain Web3 virtual hackathon on Gitcoin leading up to Ethereum Denver. Each challenge has an interoperability theme with a focus on building bridges between XRP Ledger and Ethereum over interledger protocols. So they're building a bridge, trying to make Ethereum and XRP interoperable using the XRP Ledger. And then Crypto Wolf weighed in. We think the XRP to Ethereum and ERC20 tokens bridge is important since XRP is one of the most liquid cryptocurrency, but it doesn't have a compute layer to support complex smart contracts for growing decentralized finance market on Ethereum. So they're working together. This is a good thing for you and me. Next, Michael, okay, now this is the economy stuff. I want to show you some of this scary stuff that's going on. And I'm not going to say the dirty word, this dirty word that you're not allowed to say on YouTube or you get strikes. So, China car sales plunged 92% during the first 2 weeks of February as the dirty word kept buyers away from showrooms. And then there's this. This was sent to me. Ooh, man, it's always a challenge when I get to this name. Heo Seiko Carmona sent me a couple of things. First one is this. This word spells trouble for China's banks. And then there was this. And this is a video of what they're saying are bank runs going on over there, folks. Now, this is scary. I told you. Now, remember, and Cryptopolis reminds us here, remember, all of this lays at the feet of all of the central banks around the world. All this recent thing that's going on in China, all that is that's one flashpoint that could very well be the thing that sets off a collapse that has been in the making since all these central banks of the world started all their bullcrap, QE, printing money, you name it. They've done it. Bailouts, bail-ins, whatever you want to call it, all these government programs to create a perception of a market that is not what it looks like. It's all set up for a collapse. And guess who will get burned? It'll be the people. It won't be these clowns that have set all this up. And I'm going to show you the perfect illustration of all this absurdity. But first I wanted to show you from Cryptopolis, it's good policy making until it isn't. And this is a tweet from this Vin Henrich. Hey, Federal Reserve, stop lying to yourself and the public about the real world consequences of your policies. I'm not going to go into the article. It speaks for itself here. The Federal Reserve thinks low rates have had only a modest impact on stock market. In other words, this stock market that's been going up for going on 11 years. And remember, folks, if you go and I've shown you before, if you go and look, the average stock market, the average recession in the history of the United States has happened every 6 years because these guys have artificially kept interest rates low and propped up these markets with their QE and money printing. They have created the false perception of a healthy market. And now this market is going, it's been about 11 years since the last recession. And this is not going to end well. And now I'm going to show you, and it's perfect that they did this with a cartoon. This came out around the time that Ben Bernanke was doing all of his money printing. And many of you have not seen this, but this went viral, and I believe it went viral. There's like 6 million views on this. I believe it went viral. They literally did a cartoon to illustrate the absurdity of what these central banks have done and the position they've put all of us in. And so I want you to watch the whole thing. It's 6 minutes and 48 seconds. I'm going to end the video after I show you this. So if you've already seen this, then now it's time to go on with your day. And I understand. But it's so great, it's gold, and I want you all to watch it. Here it is. It's called Quantitative Easing Explained. It's both funny and absurd and illustrates the ridiculousness that these central banks around the world have put us, the position they've put us in. Here you go.
Hear about the Fed?
No, what about the Fed?
They announced another round of the quantitative easing.
What does that mean?
It means they are going to make large asset purchases via POMO.
What does that mean?
It means they are going to expand their balance sheet and buy treasuries.
What does that mean?
It means they are going to print a ton of money.
So why do they call it the quantitative easing? Why don't they just call it the printing money?
Because the printing money is the last refuge of failed economic empires and banana republics, and the Fed doesn't want to admit this is their only idea.
So why do they want to print the money?
Because they say we have the deflation, and the deflation is very bad.
What is the deflation?
The deflation is when prices of the things we buy go down.
Isn't that good? Doesn't it mean the people can buy more of the stuff?
Yes, but the Fed said this is bad, especially during the recession.
So they think that during the recession, when the people have less money to buy the stuff, it is bad that the prices go down?
Yes, the Fed would rather have the inflation.
So why does the Fed think we have the deflation?
Because the CPI said so.
But aren't the food prices higher than a year ago?
Yes.
Aren't the gas prices higher than a year ago?
Yes.
Aren't the healthcare costs higher than a year ago?
Yes.
Aren't tuition prices higher than a year ago?
Yes.
Aren't the taxes higher than a year ago?
Yes.
Aren't the subway fares higher than a year ago?
Yes.
Aren't the stock prices higher than a year ago?
Yes.
Aren't the bond prices higher than a year ago?
Yes.
So what is deflating right now?
The only thing deflating that I can see is the Fed's credibility.
Did they have a lot of credibility to start with?
No.
Why not?
Because the Fed has been wrong about every major economic development in the past 20 years.
You mean they didn't see the internet stock bubble?
No. In fact, they helped fuel the internet stock bubble.
And they didn't see the housing bubble?
No, in fact, they helped cause the housing bubble.
And they didn't see the subprime crisis?
No, in fact, they told us subprime problems were contained right before the shit hit the fan and the Lehman went bankrupt.
So has the Fed ever been right about anything?
Let me see if I can think of anything. Nope, nothing.
Who runs the Fed?
The Fed is run by the Ben Bernanke.
Does the Ben Bernanke have a lot of business experience?
No, the Ben Bernanke has no business experience.
Does the Ben Bernanke have a lot of policy experience?
No, the Ben Bernanke has no policy experience.
Has the Ben Bernanke ever run in an election?
No, the Ben Bernanke has never run in an election.
So what qualifies him to run the Fed?
I don't know, maybe the fact that he has a nice beard.
But my plumber also has a nice beard, and I would not trust him to play God with the economy.
No, although when you call the plumber to fix something that is broken, they usually fix it, not break it more.
This is true. The plumber is clearly smarter than the Ben Bernanke.
Well, that is why he became a plumber, and not an economist.
How does the Fed execute the quantitative easing?
They print the money, and then they buy the treasury bonds.
Do they buy the treasury bonds from the Treasury Department?
No, they buy the treasury bonds from the Goldman Sachs.
You must be shitting me.
No.
So let me get this straight. If I want to buy the treasury bonds with my money, I can buy them directly from the Treasury.
Yes.
And if you want to buy the treasury bonds with your money, you can buy them from the Treasury.
Right.
But if the Ben Bernanke wants to buy the treasury bonds using the American people's money, he does not buy them from the Treasury, he buys them from the Goldman Sachs?
Exactly.
And does the Goldman Sachs give him a good price?
Of course not, they are the Goldman Sachs, they make their living ripping off the American people.
But how is the Goldman Sachs able to do this?
The Fed announces what it is going to buy, and when it is going to buy, before it does the trade.
So the Goldman Sachs can front-run the Fed and give them the worst possible price on the treasury bonds?
Yes, exactly.
And the Fed is okay with this blatant theft from the American people?
Of course, otherwise, the Fed would just buy the treasury bonds directly from the Treasury Department.
Who inside the Fed is responsible for the buying of the treasury bonds?
The buying of the treasury bonds is conducted by the New York branch of the Federal Reserve.
And who is in charge of the New York branch?
The head of the New York branch is the William Dudley.
And what did the William Dudley do before running the New York Fed?
Before running the New York Fed, the William Dudley was a partner at the Goldman Sachs.
So the guy in charge of the American people's money when dealing with the Goldman Sachs used to be a partner at the Goldman Sachs?
Yes.
And nobody has a problem with this?
Apparently not.
Is this an episode of The Twilight Zone?
I don't think so.
Are you sure?
Pretty sure.
So what you are telling me is that the Fed thinks prices are going down, when in fact they are going up?
Yep.
And they think during the recession, with the high unemployment, it is better if the things people need to buy cost more money.
Correct. According to the Ben Bernanke, the inflation will create the jobs and improve the housing market.
Has this ever been tried before?
Yes, just last year the Fed tried the quantitative easing with $2 trillion.
Did that create the jobs?
No.
Did it help the housing market?
Not at all.
Did it help anybody at all?
Yes, it helped the Goldman Sachs.
How much of the money are they printing now?
$600 billion.
So even though the first $2 trillion did not create the jobs or improve the housing market, the Fed decided to do another $600 billion anyway?
Yes.
Who put the Ben Bernanke in charge?
The Ben Bernanke was first appointed by the President Bush, then he was reappointed by the President Obama.
But wasn't the President Obama supposed to bring the change?
Yes.
How is putting in charge the same fool, who has been wrong about everything, the change?
Well, under the President Bush, the Ben Bernanke only blew up the American economy. Under the President Obama, he is working on blowing up the entire global economy.
That does not sound like the change we can believe in.
Definitely not.
Who else supports the Ben Bernanke?
Most economists around the world think the quantitative easing is very dangerous.
Does anyone think it is a good idea?
Yes, the people at the Goldman Sachs.
Is this some kind of nightmare?
No, it is very real.
I want to bang my head against the wall.
You should not do that.
Why not?
Because the healthcare is too expensive.
But didn't the President Obama fix that?
No. But that is the subject of a whole other video. Goodbye.
You can't make this stuff up, folks. It's so absurd. But nothing illustrates the absurdity better than that cartoon to me. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family that the digital asset investor might have some wings tonight. Haven't decided. It's Friday. Thanks for listening.